All right, are we going here? Are we going? Yeah, okay. Hey, everybody, this is Russ Story. I'm with Story Wealth Management Group here in Douglas, and we're going to try a little different spin here on our Money Matters program on WDMG 979, your community station, as well as Wave 94 down in Tallahassee. We're going to try and cover some things here today, and I'm going to basically just record the radio show here today, and as I've done several times now, throw it up on Facebook Live. So anyway, here we go. We're going to get going here in just a second. So give me just a minute, and we'll get the main engine fired up. All right. Okay, this is Russ Story with Money Matters. It's a pleasure to be with you here today. I'm excited about our show today. We're looking forward to some pretty good information. We got some good news here to talk about today. I'm Russ Story, your host. I've been a full-time financial advisor for about 25 years, and it's been a pleasure all the way. And I have gleaned a few things I want to share with you today about your personal financial money management and some other things. Hopefully we'll share with you some ideas today that'll help you and your family going forward. So got a really big show for you today. We're going to talk about income taxes. How exciting is talking about income taxes. I know it's got everybody fired up already. We're going to talk about kind of what keeps me up at night. I'm going to talk a little bit more about that. I'm going to talk about the fact that I've been doing this for 25 years, what that means, which is nothing. I'm going to keep doing it. But anyway, we're going to talk about that a little bit. First of all, I want to announce a winner. Every year, our clients are encouraged to participate in an annual client survey. And what we do is we go through and we ask them about what we're doing, how we're doing it, and we try to get their feedback from those. The folks that we deal with, our clients, actually, those are the folks that matter most. And what we're trying to do is get an idea about things that we're doing well, and of course the staff and myself, and then we also want to get some constructive criticism. So and that usually works out pretty well. So we got some feedback. First of all, if you're a client of Story Wealth Management, you're one of my clients, I appreciate it very much. Thanks so much for taking your time to do the survey, because I know it took time out of your day, and we appreciate that. But it's really the best way that we know to improve and produce exceptional service to our exceptional clients. So anyway, one of the things we do is when we ask everybody to do the survey, we put everybody's name in a pot, and we'll turn around and we'll actually give away some Omaha steaks. I mean, now if you're a vegan, that might not work out, and we would actually, if you say, well, Russ, I'm a vegan, or I'm a vegetarian, I appreciate the steaks, but I really don't. So we get you some soybean steaks or something. We do something, but we wouldn't leave you out or give you something that you didn't want. But this year's winner, I'm pleased to say, was Ms. Sandy Overstreet. Okay, that's Benny Overstreet's wife. And thank you so much for sending in the survey, Sandy. Thanks for your participation. It means a lot, and we appreciate you and everything you do. So this year's winner of the Story Wealth Management Annual Client Survey is Sandy Overstreet, and she's already picked up her stakes, and we took a couple of pictures. And Sandy, we appreciate you very much. Okay, couple other things going on. I want to mention a couple of events. One, we are going to have a seminar down in Tallahassee. It's going to be at the Capital City Country Club. We're going to talk about a lot of things that I believe that you might be concerned about, especially if you're getting close to retirement. And if you would like to bring a friend or friends, that's fine as well. But we would encourage you to sign up quickly. You can go on to storywealth.com, storywealth.com, S-T-O-R-Y, wealth.com, and sign up under the events tab there on the homepage. And you can go in there and sign up, and it's a first come, first served deal, and we're limited. But we're going to talk about retirement matters. It's going to be September the 28th 2017 from 6 to 8 o'clock at the Capital City Country Club. We'll have food, we'll have some fun, and hopefully we'll have some fellowship, and that'll be great. So if you're in Tallahassee, I'd encourage you to go ahead and sign up today. Okay, a few things we're going to cover today. The Dow Jones Industrial Average, the Dow, you've heard of that. People talk about it. It hit 22,000 for the very first time in history today, which is pretty neat. The Dow Jones Industrial Average hit 22,000 today. Now, that's as the time of this. It's April. It's August the 2nd, and this is when I'm recording this. We're going Facebook Live, but also this thing's recorded, our show for Money Matters. So if you're listening to me and the Dow's down or up, this may be old news, but the reality is it's a very exciting day. Well, one of the reasons why is because at the beginning of the year, the Dow Jones Industrial Average was about 19.5. Okay, 19.580 or something like that, January 1 or the 2nd. But the bottom line is, first of the year, since then, the Dow is up about 11%. Okay, so I predicted at the beginning of the year that the Dow would hit 23,000 by year end. And that may be the case. But you say, well, Russ, when the Dow's at 19.5 and it hadn't broken 20,000, for me to come out and say that I believe that it would probably hit 23,000, that was a little bit of a, courageous call, I guess, or maybe. But the bottom line is I backed off that. I backed off about a month ago, and I said because of some of the hesitation on some of the tax cuts, some of the incentive programs that Congress seems to be having a real problem with, I backed that off to 22,000. I said I don't know when it'll do it, but I believe it'll hit 20. Well, today's the day. So today's the day, August the 2nd, 2017. I have been vindicated. It hit the 22,000 mark that I believe that it would. Well, Russ, do you think it'll hit 23,000? Don't know if it'll hit that this year. Yes, I believe that it will pretty soon, but I don't know that it'll do it this year. I don't think anybody knows that for sure. But at the end of the day, I hope it does hit the 23,000, and I hope that I was right to begin with. I hope I was right at the beginning, but you never know. So what now, Russ? Well, first of all, let's talk a little bit about why it did that. The Dow is what they call the Dow Jones Industrial Average. It's really the oldest, I believe, one of the oldest indexes that we use to gauge the health of the market, of the stock market. And really what drives stock prices, it really amounts to profits. So if profits are driving the stock prices, the Dow Jones Industrial Average is actually made up of is an index of 30 stocks. Now, hopefully, and what they attempt to do is get the good, high quality, salt of America, blue chip type companies, and they plug those into the Dow. Now the Dow is different than it was 20 years ago. They can change a stock out, but they have a formula to keep the value consistent. Theoretically, if they never ever changed a stock in there, you could actually take the 30 stocks in the Dow, add up the prices at the end of the day of each stock, and you come up with the index of 22,000. Well, you can't do that now because they've changed some out, and there's different factors involved with the valuation. But the bottom line is that's, in a nutshell, that's kind of what it's designed to do, to look at the stock prices of the blue chip, salt of America type companies, Procter & Gamble, and the big companies that kind of run the country, many would say. So earnings are growing, and they're growing faster than anybody really expected. That's my opinion. We also have a consumer confidence and improving business confidence when you look at the different metrics across the board and the different measures of that. Improved consumer mood is partly due to a little better job market. U.S. unemployment rate is 4.4% according to the government numbers. Trump administration has been focusing on deregulation. We know that, and it's probably helped improve business confidence. Trump was quick to take a victory lap. He said the 22,000 barrier was breached, and he said we got a lot of things happening that are really great. And I wish I could do like an impersonation of Trump, but I tried, but it'd be terrible. I don't think I could do it. I need to work on that. Okay, I'll work on that for you. But anyway, he says our country is doing very well. So some call it the Trump bump. Okay, sounds like a disco dance somewhere, but not sure about that. But he's definitely hadn't hurt the investment markets. A lot of companies are doing fairly well. Also, we have a falling dollar, it seems. The value of the dollar has come back some, and theoretically that helps us with global exports to other countries because it makes our goods cheaper for them to buy overseas so that they, it helps our export theoretically. So Caterpillar, for example, had record earnings, fantastic earnings. And last quarter had a lot to do with the fact that their business is in the emerging world. In other words, they're shipping those big pieces of equipment, the excavators and the bulldozers and all over to Asia, where there's a lot of growth and a lot of demand over there. So that's kind of helping them out. And a dollar that's down a little bit, well then, that should help out too. So McDonald's, Boeing, Apple, they all announced better than expected earnings yesterday, and that didn't hurt the market at all. Okay, so what now, Russ? So everything's good to go? We don't have to worry about risk anymore? Everything's okay? No, I wouldn't say that. As a matter of fact, my opinion is very strong that we need to be very vigilant right now when it comes to risk and what all that means. So I'm going to take just a moment. We'll take a break and we'll hear a quick word from our sponsor. Okay, let's get this radio thing here done. Let's see here. And we'll start again. Yeah, I want to do this in 2 segments, so hopefully that'll be good. All right. So, all right, it's Russ Story back with you. Money Matters on the radio. Appreciate you being with us today. Hopefully you guys are looking forward to a great weekend coming up. Hopefully you got some money to spend. You need a little jingle in your pocket. Hopefully everything's looking up for you. The stock market's doing well here lately, and hopefully we can continue doing what we're doing. And one of the things we encourage our clients as far as investment allocation is concerned, we try to recommend that we put ourselves in a position so that we make hay when the sun shines. But one of the things that we need to do is make sure that we understand the risk that's involved in an investment portfolio. And the question with the market at an all-time high now, it's at 22,000, which again was my prediction at the beginning of the year at 23, and I backed it off to 22. So I'm going to say, okay, I got it. I hit the mark, okay? And then we'll go to the next thing. I'm not going to make a prediction on the end of the year, but I wouldn't be surprised if we don't hit 23,000 by the end of the year, which was my original prediction at the beginning of the year. But so, Russ, what keeps you up at night? All this is going well, and I hope that my clients have enjoyed this increase in valuation from the markets, the equity markets and whatnot. Hopefully you've got a financial advisor and they've had you in a place where you've been able to make a little money here in the last year or so. And I hope that's the case. But I want to share with you a couple things that concern me a bit. Here's what we know. Okay, now things are going well. But what we know is that since 1929, we know that the market has typically pulled back about every 3.5 years. Now, if I told you it had been 3.5 years since the market's had a pullback, you'd say, well, we're probably due for a pullback based on historical averages. And if I said to you it had been 7 years, you'd say, well, golly, we're more than due for a correction, a pullback. The pullbacks historically have averaged somewhere around 35%. Okay, somewhere around 35%. and typically it takes about 3.5 years to recover. Okay, so it's not something that we can just not worry about, you know. Anyway, a lot of times downturns will last on average for about 10 months. They'll go down. So, my question is, and you can look back, the dot-com crash of 2000. Let's not forget the market went down about 44%. So, you had $1 million, your account value would be $552,000 in a regular investment account. It wouldn't have recovered from 2002 is when it bottomed out. So from 2000 to 2006, you were still trying to get back to par. Okay, that's a long time in investing language. Okay, financial crisis, November 2007. It would have taken you till March 2012 to actually recover the average portfolio of stocks based on the Standard & Poor's 500 index. Now, if you had taken more risk, if you weren't in all the stocks that the S&P 500 has, you could have done better, you could have done worse. But that's just sort of the index average. So are you prepared for a market downturn? And I think as we get closer to retirement, this is a question that we need to ask. I think it's very important that you understand that markets can and will go down. In my opinion, it's not a matter of if the market will go down again. It's a matter of when and how much. Another thing that concerns me a bit, when you look at what the market has done historically, a lot of times it'll revert back beyond the mean. In other words, it has a tendency to come back, and if the market, that pendulum swings way over to the right, then it has a tendency to swing way over to the left. If it has a little swing to the right, it swings a little to the left. So my point is, a lot of times the bigger the step forward, the bigger the step backward. So, my opinion is we're looking at pretty strong valuations right now, and the stock market seems, many would say, is fully valued. Nobody's worried about risk. I think we as investors and my retail clients, especially the older you get, the more concerned about risk you need to be. So I've been talking about that for quite a while. I think, though, when's a better time to reevaluate your risk situation? Is it time when you've made a little bit, or is it time when we're at an all-time high? And we know what history's taught us. I'd encourage you to ask your financial advisor, if you don't know, does he have a strategy to manage risk? If he does not, I would encourage you to ask him why not. He'll probably make some argument that you just need to buy and hold. Well, we don't, the Story Wealth Management Group, we don't advocate buy and hold per se. We advocate buy, hold, and sell. Well, Russ, when do you sell? Well, we have strategies in place, and we make recommendations, and that's something that we're very proud of, and we can talk to you about some of the strategies that we can put in place perhaps to try and manage the risk. But hear me now, believe me later. You got $500,000 in an investment account somewhere, and all of a sudden we have a 45% drop. You're looking at $325,000 in value, and that may keep you up at night, and not knowing when that's going to go back up. I would encourage you to talk to your financial advisor and ask them about a risk management strategy. Talk to them about being comfortable or not comfortable with your risk situation. If your money's going to get hammered and you're going to lose a lot of money if the market goes down, talk to them about trying to take some of that risk off the table and reduce your overall risk situation to a point where you're comfortable. Okay. Grandmama said it ain't what you make, it's what you keep, and I think grandmother was right when it comes to that. Going to talk a little bit about tax returns and the tax code. This is something that's a bit boring, but I think it's something that we ought to talk about, because we don't, most people that, we don't kind of really understand, how the tax code and how income taxes work. And I just want to cover some basics. There's a few things that I know. I know that the Internal Revenue Service says that taxpayers and businesses spend about 6.1 billion hours a year complying with the tax filing requirements. That's an awful lot of time. In fact, if you put this into perspective, if the work was done by a single company, it'd take about 3 million full-time employees, and it'd be one of the largest industries in the United States. Okay, so it's a whopping burden that's put on the American taxpayer, the American citizen, to try and comply. It's complex, and taxes can be, and the income tax process, while it's fairly straightforward, the majority of Americans would rather not probably don't understand the process, and many say they had just as soon not understand the process, which I think explains why more than half hire a tax professional to assist them in their tax filing every year. I know we do. We're very proud of our accountants here at Story Wealth Management Group. I wouldn't want to try to live without them. So, but the tax process starts with income, and most income received is taxable. So a taxpayer's gross income includes income from work, investments, interest, pensions, as well as other sources. The income from all these sources added together, and you come up with your AGI, or adjusted gross income. What's not considered income? Well, child support payments, gifts, inheritances, workman's compensation benefits, welfare contributions, half a self-employment tax, moving expenses, and some other items. So the result is your AGI, or adjusted gross income. So you got your gross income and adjusted gross. So from adjusted gross, deductions are subtracted. The deductions, taxpayers have two choices. You can take the standard deduction, or you can take an itemized. So depending on your situation, whichever is greater. Now the standard deduction varies based on filing status, and this is kind of the way it breaks out. Your standard deduction for a married filing joint is $12,700 is what your standard deduction is. Married filing separately, $6,350. Single taxpayers, $6,350, and head of household, $9,350. So itemized deductions can include state and local taxes, charitable contributions, interest on home mortgage, certain unreimbursed job expenses, and even the cost of having your taxes prepared, among other things. So once the deductions have been subtracted, the personal exemption is subtracted. And for 2017, the personal exemption amount is $4,050 regardless of filing status. So the results your taxable income. Taxable income leads to gross tax liability. So here's a few facts. Okay, IRS reports that 40% of taxpayers use tax preparation software. Okay, so about 40% of you are using something like TurboTax or something like that. Also, any tax credits are subtracted from the gross tax liability. Now, a tax credit is different than a tax deduction, by the way. A tax credit is a dollar-for-dollar reduction on the taxes that you owe, whether it's a federal tax credit or a state tax credit. Here in Georgia, we have a state income tax, and you can get some things counted as tax credit. A tax deduction is simply a reduction on your income that comes off, and it can help lower your tax as well. But what's better, a tax credit or a tax deduction? Tax credit. That's a dollar-for-dollar reduction. That's like a dollar paid. So anyway, let's see what else to tell you. So understanding how the tax process works is one thing, and doing the work's quite another. A lot of our clients use a tax professional, an accountant. I think that's always not a bad idea. Remember, I'm not intending this information that I just gave you to provide tax or legal advice. I'm just sharing with you some basics concerning the income taxes and how they work, and this type of thing. So I want to encourage you, if you're down in Tallahassee, I'm announcing that workshop we got coming up. I'd encourage you to go to storywealth.com, sign up for that workshop, put your name in the pot, or put your name in the pot, and we're going to have some good cookies as well. We're going to have a meal, and first come, first serve. I'd encourage you to sign up as soon as you can. You can give us a call at 912-384-0030. You can send me an email, rstory@storywealth.com. We get some emails. I had one here recently. I'll share this with you. I had an email. Somebody said, Russ, you said you've been doing this for 25 years. That's right. You don't look old enough to be. No, they didn't say that. They didn't say. I wish they had, but they did. And they said, but how long are you going to continue to do this, man? I mean, well, let me share with you, and I think this is kind of a unique opportunity for you as if you're seeking a financial advisor. I don't know where you can find many guys with 25 years experience with a 2.5-year-old. I'm going to be working for quite a while. My plan is to continue to work and do what I do. I mean, I love what I do. It's an adventure every day. I meet with clients and we have new situations that come up almost every day, and I enjoy helping my clients solve tough financial problems. So, if I can work another 15 years, I may, if the good Lord willing. But I think that's a unique value proposition to you if you're considering another financial advisor, because I've got a good bit of experience. I believe that some of the things we do are second to none, and I'm going to continue to do this and hopefully see you through your goals, meeting your goals, and working with you to meet your objectives for years to come. So anyway, this has been Russ Story with Story Wealth Management Group. This has been Money Matters on the radio. It's always a pleasure. Hopefully you got something out of today's show. Tell your friends and neighbors about us. We're always here. We're on Tallahassee Drive Home Time, 5 o'clock on Friday afternoons, and we're at WDMG 97.9, your community station. We run Thursdays at 11 o'clock, Facebook Live. You can go to our website after the airing of the program on the radio. That's storywealth.com. And you can actually listen to the programs as we archive those this week, last week. I think we actually keep 3 weeks on there at a time. So anyway, hopefully you guys are going to have a great weekend. Again, thanks for listening, and God bless.